Hello and welcome to Commodity Champions. I'm Anisha Gupta. The festive season impacts a wide range of commodities. Take gold, for instance. Indians flock jewelry stores to buy gold during Dhanteras. With prices witnessing a decline, experts anticipate demand to surge. Items frequently used in households like spices, edible oil are also likely to get a boost from demand and the festive season as Indians indulge in various delicacies. We will be discussing all of these three components and commodities, but let's start with gold first. And to discuss the outlook for this one, we have with us Mr. Suvankar Sen of Sanko Gold and Diamonds. Mr. Sen, hi, thank you so much for joining us. And with gold prices coming down, are you anticipating or looking at demand improving going forward from here?
Yes, with the gold prices coming down, and the festive season is just around the corner. So while the Pitri Paksh is starting in the coming days, up to 14th of October, we see that, the winter weddings and also the plan for Dhanteras, consumers start moving around, the stores reach out to the customers, and customer starts giving their advances and select the products for the season. So I think this price coming down will give them a boost and encourage customers to be very keen to buy more products, and the volume in terms of the quantity of gold or whatever diamonds they would want to buy, that is there is a probability of it going up. So overall I think it will be a tailwind towards buying having a good season ahead.
All right. So the decline in prices rather is definitely supporting demand. We have seen the diamond prices also come down, and that is the reason all the diamond associations in India have come together as a cartel to ensure that not too much imports happen in order to stabilize prices. What's your sense on what really conspired?
See, economics is all about demand and supply. And we have seen that globally, US is in a kind of a slowdown. China as a market is also slow. So with the production and the supplies that have already been there and the preparation that the industry had taken to supply to all over the world, I think they did not have any option but to control the supply so that there is stability in terms of pricing and demand. And we are all very hopeful that the demand in our country shall be very good for the festive season, and the prices will stabilize. It will not go down more, and it will give confidence for everyone in the industry. So I think they didn't have any option but to take this step for the betterment of the industry.
Hmm. All right, I don't think the consumers would agree much with that, but I do understand that the industry clearly seems to be facing a lot of issues on that one. But also, since the listing, how's been the market for you? We have seen good numbers. We've seen funding come in. You've gotten more partners as well. How has your journey been since IPO until now?
So, see, in terms of the effort that is being put by the team, the whole plan of the money that is being raised in the IPO to deploy it in a manner that we open more stores. So, in the first quarter, we opened 5, 6 stores. In the second quarter, we opened 2, 3. There are more stores that are in the pipeline. So, the whole deployment of the funds are happening. The upcoming season looks good. The growth in terms of volume and value year on year in the quarter 1 has also been good. Quarter 2 will be, somewhat maybe lower than quarter 1, but still there is an element of growth in it as well. So all in all, I think that the legacy of our company, the effort being put not only in the past 1 year, but in the past 50 years, previous generations, as well as the effort put by the team, we're very thankful and I think humbled by the response that we are getting from the investors, the faith that they're putting on us. And we would continue to work hard and do new things, which is most important, taking new initiatives, new markets, new products, new designs. And I guess that's the way forward.
Hmm. You spoke about the expansions in sense of stores in the first and the second quarter, but what's the overall plan here? How many stores do you have right now? What is the longer term vision with that?
So, if you look at the past, in the previous years, there has been a store opening of 12 to 15 stores every year. We have tried to aim for opening more than 20 stores for this year with the money raised in IPO. We are touching half the number, half of the year is left. So our effort is towards opening more stores. Plus the fact that we have a franchisee model which is very much sustainable, and it allows us to penetrate into the tier 2, 3, 4 towns and cities of the country. And I think that the coming 10 years, we as a country are looking forward to a high growth. Infrastructures are getting built, consumer aspirations are being fulfilled. So we are very hopeful, and we will try to fulfill that number of stores that we open every year. And that would be the way forward.
And you're also keeping up with the tech because Sanko has launched Sanko Wars. What is the feedback on that? What led you to this? And what are you looking on with Sanko Wars? Who are you trying to attract? And what more will you add to this?
So see, we have always believed in a phygital model, which is the need of the hour, especially with the thought of catering to your customers who've been there with you, as well as catering to the new age customers. Technology has always been a strength for Senco. We were one of the first few industry players to have implemented ERP. We are one of the first few to have implemented Microsoft CRM. Mr. Satya Nadella in his visit to India in the beginning of this calendar year spoke of Senco as a case study from a 3-store to 130, 140 plus stores using ERP in the back end and now implementing the CRM to be in touch with the customers. So this is one such initiatives of metaverse or that we are trying to do where we can give a more immersive experience to the customer. See all these brands, the products, the collections that are already there through the e-commerce website. We are being able to provide the designs to the customers. But if you look at it, the way even if you look at Meta, they are looking at new thought process of giving a much more engagement to the viewers and the audience. Similarly, this is one such attempt of Senko to give a more engaging opportunity to the customer, just like the entertainment of gaming. This is like a gamification of the customer experience. People can go, they can see the product, have a 3D outlook, get more details about the product, get points. There will be more engagement. Look at the various advertisement videos, much more information about the brand and the products that we'll keep launching. So this is what has been our attempt, and it is very initial phase. We wanted to launch it before the festive season begins so that there is a more enthusiasm from the customer side, and we will keep building on it, bringing in new experience opportunities through the metaverse.
Oh, well, absolutely. All consumers want to look at new opportunities, new designs, new launches. How are festivities looking to you, by the way? I mean, all these exhibitions that we've seen, B2B and various cities, states, countries have generated great numbers. On ground, how do you look at the demand?
So, quarter 2 has been slightly muted, but then that is because quarter 2 is not the season of buying as well. But if you see that the gold prices are in a downward trend, as an industry, the preparations for the upcoming festive season, the wedding season is very much there. People are very optimistic. We are also reaching out to our customers, and there seems to be some amount of enthusiasm and interest amongst the customers also to buy jewelry. So this is how I think we are all very positive, and we hope to have a wonderful, festive Dhanteras season compared to the years that we have had in the past.
Oh, well, absolutely. We hope that too. Mr. Sivankar Sen, thank you so much for joining us and talking a whole host of things about the jewelry industry there, whether it's about gold prices, diamond, and of course, the store expansions that you're looking at. Thank you so much for your time. Well, shifting focus to the edible oil business then, and I caught up with the managing director of Adani Wilmar, Anshu Malik, last week and spoke to him about the growth in the edible oil sector, the government regulations, and the company's own strategy. I began by asking him about how he sees the industry going forward, given the current higher import picture.
First, the imports were much higher in the early part of the year, and that is because the consumption story was very, very strong. Against an average consumption growth of 5%, 7%, we saw 25% growth in branded oil, and you can say on an overall, it was around 14-15% growth. The biscuit industry, the baking industry, everybody has consumed more in April, May, June. July onwards, the consumption story dropped a bit, but the imports were not dropping. And that is because we all felt that the festive seasons needs more consumption. So we were preparing for it. And this year, the brands were prepared for it. That is how the inputs were high, and today we are sitting on high inventory.
How would you look at the Indian edible oil industry? Would you say it's very competitive? Would you say there is, we also see more startups coming in, wood pressed, more blended oils, rice bran. I mean, looking at the kind of fads that they're in and the health consciousness that people are getting into, how would you read the industry?
I think the entire country's demographic pattern, if you see the young population, more girls going to college, more women going to workplace, these are all bringing in more income. And with more education, more income, the demand for better brands, more hygienic brands, more quality conscious brands, or value for money but functional brands, people are looking for it. And that is why cold press or organic and all this, although they may be very small in terms of percentage, but yes, it's a niche product and people are asking for it. Particularly the women force who are going to work, and then when they see everything happening, they are upgrading themselves, and that is the best part of it. The country will consume good brands and good quality products.
The other thing is that almost everybody from the industry has been projecting at higher per capita consumption going forward. What do you think is the reason for that, and from where we stand, where do we see ourselves by, let's say, in the next 5 to 10 years?
See, when you look at per capita consumption, you see Pakistan at around 1920, you see Bangladesh at around 1920, China at 24, we were at 17. 17 is surely less. There are states like UP, Bihar, where the average consumption is 10 kilo because they can't afford so much. Now that the edible oil prices have come down, the affordability has increased, and that is why when a poor man buys oil, they don't buy on liter, or they buy 100 rupees oil. Now at 100 rupees, earlier he was getting say 1 liter, today he is getting 1.5 liter. And that is why the consumption story is so good. And this will continue till the time the edible oil prices are at these levels, stable levels. Second, if you see, out of home consumption has grown tremendously. And out of home, you will agree that we consume more oil when we go out, because the vegetable or the food that we buy or eat has more oil content than what we have at home. So the per capita consumption increases. Then you have the bake products, cakes, pastries, and then frying products and all that, namkeen and all that. I think everybody is enjoying. And you go out and you see how people enjoy the holidays. So I think overall edible oil consumption will grow.
As an industry, how would you look at various measures that we keep seeing coming in from the government, which we are assuming will continue for the next 1 year as well? But the duty, explaining your stock holdings, etc. How does industry see that?
I think the government must not bring in too many rules, regulations. Stock control orders or anything are not productive these days. You see, these rules were of long time back when India was not so developed. Today, your warehouses are much, much bigger. If you keep stocks in your warehouse, more than 5,000 tons we can keep at a place, then it comes in that stock control order, you can't do it. Then our supply chain gets impacted. So all big companies will face this problem. So I think it is not, it is detrimental to better supply chain. When you look at the government duty structure and all this, they must have some slab at which if it goes below this, then you put a duty. If it goes above this, you reduce the duty, so that there is a semblance of the rate. You have to ensure that your farmer community is happy. Otherwise, the poor man produces but is not sure about his return. And how will he produce more oilseed? And India is importing 65% of its requirement, which is pretty high. And in a bad year, it can be very, very bad. And we have seen how things happened when Ukraine war. So I think we should prepare ourselves. So a balance between consumer and producer must be there.
A final question. So, all companies talk about branding, marketing, making meaningful penetrations into the markets as well. What has been your strategy?
See, we have built Fortune as our brand for the last 23 years. And over the years, we have invested in it. And we have grown it. Today, obviously, it's the largest selling brand. But it gives us a lot of stability in terms of pricing, in terms of risk management, in terms of absorbing the shakers, ups and downs in the edible oil market. At least the brand protects us. And today 75% of the business comes from the brand. So we are we have a shock absorber, I would say, and a good shock absorber. So as a brand, it helps us. Now, that is what I would always say, companies must go and build brand so that eventually the brands protect you.
Absolutely. Very well said, Mr. Malik. Thank you so much for joining us today.
Thank you.
Thank you. All right, that was an interesting conversation with Adani Wilmar on their edible oil business, where as he said that Fortune is a brand absorber and they have built it quite strong in last 23 years. And during the festivals, the expectation is that, one, there are enough stocks, but the expectation is that the demand is going to be on the higher side as well, especially with people going out, eating out and traveling, etc. But with that, it's time for another break. Coming up, we speak to Rajiv Shah of Everest Foods and Kirandeep Swani of Swani Spices on the outlook for this sector as we return. Welcome back. You're watching Commodity Champions. Let's shift focus to our third commodity, which is spices. I spoke to Rajiv Shah of Everest and Kirandeep Swani of Swani Spices, and I began by asking Rajiv about the ongoing debate in the spices sector over organized versus unorganized, and what does it mean for India?
There has been a continuous growth from unorganized to organized. I guess everything is important for such a large country. Eventually, the organized sector is growing in leaps and bounds every year, and we cannot have any complaint on it.
All right. Would you say that the branded really works, and would you say it is about standalone spices, or is it the blended which seems to be doing better?
Blended is always organized because of the expertise of the product, and I guess many factors, including post-pandemic, people belief on brand, and that has changed everything. And so now we see a lot of customers opting for branded pure spices also. So pure spices also is a very big market in organized sector. It's growing. Very good.
Mr. Swani, and the other conversation really is about organic vis-a-vis the usual standard spices. How is that one picking up?
So Manisha ji, let's put them into three categories: conventional, sustainable, pesticide controlled, and top of the line organic. So branded organic is a growing segment. The premiums are there. Customers are happy to pay it, but trust me, it's a lot of hard work to stay in the organic space, because the regulations, the requirements, especially in the United States, are just getting tougher and tougher. And the certifying bodies here themselves don't know whether they're coming or going. Quite a few of them have been disqualified. The people who are there are just running scared, and the backlash is coming on us. So organic is becoming a more and more difficult space to be in, but then, as we say, where there's a challenge, there is an opportunity.
Yeah, it is, sure. And India being the major producer, consumer and exporter as well, how has the conversation been with major importer countries, that is?
It's, Manisha ji, thing is, the customer very rarely today, in today's environment, post-COVID, argues on price. Okay, a couple of percent here and there, but the most important thing for them is quality and consistency of quality. That's most important.
You look at the number in sense of exports, the year clearly hasn't been so bad. I mean, yes, there was a decline in June. July saw a pickup yet again. The year clearly has seen more positives in sense of export numbers than declines.
But it works two ways. Now, let's take an example of Jeera. Starting of the season, it was 200, it's 600.
Yeah, right.
The export has definitely been impacted. And Rajiv will probably bear me out on the domestic. I don't know whether he's seen a drop in sales or not.
Have you, Rajiv?
Not. I can't say that there is a drop in sales, but the problem is, if the market is so volatile, at what price do I sell? I can't have a new MRP every morning. And if in a month, if I have 200 rupees up or 100 rupees up, I can't keep on changing. Having said that, you now see a lot of brands or unorganized sector and the adulteration part and everything happening.
Yeah.
Luckily for Everest, the sales have been not stagnant, it has been going up. And so far, I have not witnessed any such things. But Jeera, every house needs Jeera. How do we, stop consuming?
From where we stand right now, what future would you see in sense of prices and demand? Because a lot of people believe that where the prices are right now, we clearly have more space higher.
Well, you're putting me in the dock again. Turmeric, for instance,
Yeah.
I think the prices are going to stay stable for now,
Okay.
even through 2024. Jeera, I think we will see a 15 to 20% reaction. But in March 24, when the crop comes, chilies, yes, we will see a decline closer to the end of the year or early next year. So coriander, I think, is going to stay pretty stable.
All right.
No, from where I see, I think there would be a correction in most of the spices.
Okay.
And I use the word correction because I would not say where the spice price was 6 months ago or a year ago. That was the right price. It was for some of them, like turmeric, it was all-time low. I would say let certain spices get corrected.
Okay. Corrected higher.
We cannot have so much volatility in commodities. Not good for customers, not good for brands. So there would be correction, and maybe in 6 months' time, we'll see a stable but a growing market.
Rajiv, with the passage of time, we've seen ready to eat do quite well. We've seen more people work, and that whole thing about perhaps making blended spices at home is clearly out of the window. Not too many people do that right now. Where do you say, what category for you has done the best?
Blended spices has always been a main success for Everest. And I think it was not so easily possible to make things at home because you need 20 or 25 or 28 ingredients to make 1 pound of masala. And now I see with growing times, we now have a different range of herbs. We have different type of chili powders and pure spices and everything. And we need it. We need it at home. So it's clearly convenience over anything else.
What about you, Mr. Sawhney? What has done the best for you? What new categories have you introduced, and where do you see the market headed?
Manisha, unfortunately, we are not so much into the blended spice space, except certain amounts of curry powders that we do for the export. I would say the overall basket, mostly in the single spices, has done well for us.
Okay. And what kind of growth are you anticipating, whether it's about domestic, which is about the businesses that you run, and exports?
Growth, if I hit 15%, I'll be very, very happy. But I doubt that will happen. I think we'll stay closer between the 10 plus %.
Rajiv, what's the number for you?
I guess as we know, it's not only growth from different new products. It's a growth from unorganized to organized. The growth is people trying more products, more dishes at home. Anything about 20% is what we look every year, and I think we get it.
All right, that's the spices industry, which is hoping that they get a growth of anywhere between 15 to 20%, whether it's domestic markets, as Everest was talking, and the export markets, as Mr. Sawhney was talking. But let me tell you that the prices this year have been very volatile for spices. We've seen all-time highs on turmeric and cumin as well, with prices raining as much as 200% in matter of last 1 year itself. So that's the market we were talking about. But with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.